The upper Midwest is home to some of the nation's best occupancy rates all across the region, some healthy to very strong rates, except in Indianapolis. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Indy update. Let's kick it off with a very long list for you. Here are the occupancy rates in the upper Midwest metros, and there are mixed definitions for what the upper Midwest is, but we're going to define it as the metros in Ohio, Indiana, Illinois, Iowa, Michigan, and Wisconsin. So here was what we got. Occupancy of 97 to 98% in Madison, Milwaukee, Minneapolis, St. Paul, and Des Moines. 95% or better in Lansing, Grand Rapids, Chicago, Akron, Cleveland, Cincy, and Detroit. And then 94.3 to 94.8 in Columbus, Dayton, and Toledo. And that leaves just one metro lagging the pack, Indianapolis, 92.9% occupancy. And this really isn't a new pattern. Indianapolis is almost always the laggard in the Midwest. And get this, since the year 2000, occupancy in Indianapolis has reached 94% or better just once. And that came in third quarter 2007. The metro's average rate since 2000 is just 91.7%. So at 92.9% at the end of Q2 2012, we're actually above the long-term norm. And looking at this chart, you can see that Indy has had some up and down fluctuations over the past 3 quarters. Most recently, occupancy fell 80 basis points in Q2 while climbing 30 basis points year over year. And one reason that apartment occupancy rates tend to be low in Indianapolis is that single-family home prices tend to be low. Even before the bust, Indianapolis has often ranked as among the nation's more affordable large markets in terms of median single-family home prices. The median single-family home price most recently came in at about $115,000. And in fact, just this month, Smart Money magazine named Indiana as perhaps one of the best places to retire due largely to its low housing costs. And because of the low prices, it's been tough for the Indianapolis apartment market not only to get good occupancy rates, but also to muster up much rent growth. In fact, we've actually seen annual rent growth levels drop off from 4.4% in Q1 of 2012 to just 2% in Q2. And that slide isn't all surprising, given that home sales are starting to pick up again, and also since apartment vacancies remain so abundant. And by the way, the only upper Midwest metro to see less rent growth in the past year was Madison, where rents climbed just 1.4% despite that tight occupancy rate. Now, there are a couple spots in Indianapolis that actually have some pretty good occupancy rates, but even there, rent growth levels have been minimal. Let's show you a couple here, some of the more desirable submarkets in the northern end of the metro, starting with Carmel, Hamilton County. Occupancy there at 95.5%, up 80 basis points year over year, but rents were up just 0.7% annually. And northeast Indianapolis, occupancy climbed 150 points annually to 95.2%, but rents grew just 2.8% year over year. And looking ahead, it's very likely we're going to see more of the same for the Indianapolis apartment market. A year from now, we're looking for occupancy to remain in that 93 to 93.5% range, and for rent growth to remain at pretty modest levels. And that wraps up for Indy. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.